How's it going, everyone? In this video, we are going to talk about a fractal model playbook, specifically the hourly and 5-minute model aligned with the daily chart. Let's get into the video. Now, the first thing we look for is swing points. Why is this? Well, the foundation of the fractal model is based off the idea that price cannot reverse without a swing point. You can see here, going from a bearish trend into a bullish trend, we have to form a swing low. Going from a bullish trend into a bearish trend, we have to form a swing high. Understanding this, I decided to label the candles with numbers. Candle 2 will always be the swing low or swing high. Candle 3 will be the candle following candle 2. Candle 4 following candle 3. And candle 1 will always be the candle before candle 2. So 1, 2, 3 forming a swing low, and candle 4 is always a continuation if that trend is correct. Now, getting into the actual model is I first have to identify a daily bias. If I do not have a daily bias, I do not drop down to the hourly time frame. Now, how am I going to do this? I'm going to use daily closures. So, using this as the daily chart, if price closes below its previous day low, I'm expecting a continuation lower. If price fails to close below its previous day low, I'm expecting a reversal and for price to be bullish. And the same goes for previous day high, just opposite. Now, ideally, I want to go ahead and find swing points on the daily chart. So I want to find a closure where price reverses and then look to trade the continuation following. Once I have a daily bias, then I can drop down to the hourly time frame and look at the structure. The first thing I want to do is go to that candle 2 or the swing point on the daily and make sure we have a change in the state of delivery there. So if I have a bullish swing point, I'm looking for a bullish change in the state of delivery. If I have a bearish swing point, I'm looking for a bearish change in the state of delivery. Once I have both the closure and the change in the state of delivery, then I can look for entries. Now, where are those entries likely to occur? Well, I want to see them in the upper half or lower half of the previous day's range, and then at a point of interest. You can see here, we have a protected low. I'd want to find a point of interest in this area for the next day to form its lower wick and then trade higher. So once I've identified a point of interest, I'm going to wait for a candle closure similar to what we did on the daily chart. You can see here, the hourly retch above its previous candle's high into a point of interest and close back in. This is signifying a reversal. Now, what I'll do is go down to the lower time frame or the 5-minute chart, look for a change in the state of delivery to confirm that reversal. And with both of those criteria met, I can look to trade continuations in candle 3 lower. Let's go into Tradezella and go over a few examples of this. So to find my playbook in Tradezella, you'll just find this left panel here, go to Playbooks and search TTrades. And you can see my playbook shows up here for the intraday using the hourly and 5-minute. Here you can add the template to your playbook if you want to use it, or we can just view it. Now, if you want to review everything that we've gone over in this video, you can have a breakdown right here, and it goes over all the concepts we just talked about prior with video references. Now, the next thing we're going to go over are the rules. We went over this in the PDF, but here they are all defined. So the first thing is using the daily chart to have a one-sided bias. Using daily closures, we have to anticipate if price is bullish or bearish. If we don't have that, we do not go down to the hourly chart. With the hourly chart, we'll check to see if there is a change in the state of delivery in that candle 2 reversal. Do we have a point of interest? And do we have a candle closure in that point of interest? With all of that criteria met, then I'll go down to my entry time frame and look for a change in the state of delivery in candle 2. And with that, I can take any entry. So here are the sample trades for this playbook, and we'll go over all of these in this video today. So let's head over to backtesting to go through these trades. We'll go ahead and create a session. Go ahead and name this. And once we have filled out everything we need for this backtesting session, we'll go ahead and hit create session. So here we are in our first example, and you can see price reaches into a fair value gap right here. And then we have a bearish candle closure as we sweep out previous day's high and then close back inside. So considering that a reversal, I now have a one-sided bias to look short in this following day. So using our checklist in the Tradezella Playbook, we can now drop down to the hourly time frame. And what are we looking for? We're looking for a change in the state of delivery in candle 2. Right, so in this reversal candle, do we have that? And we do. So I can go ahead and mark that out. So now with the criteria met, I want to look for a point of interest for price to reverse from in here or to form its upper wick. Now you can see price is already trading over this fair value gap here. So if price is still going to continue lower, it's going to respect this opposing candle here. So let's see what happens. We'll go ahead and zoom in. And here you can see we do get a closure through that area, which is not ideal. So this leaves me two choices. I can either invalidate my bias and not continue to look short, or I can see that we're making quite a large wick and then change my target instead of looking for expansion back towards the daily open. So let's go ahead and see if we do get a bearish closure here. And there we do get one, as we are sweeping out this previous high, and we are also closing inside that previous candle. So now I can drop down to the 5-minute time frame. Now down here on the 5-minute time frame, I want to see, do I have a change in the stated delivery? And I do. So now it is valid to look for shorts in this following candle, anticipating it to expand lower. Now it's most ideal to have it open, make a high, get on side, and trade it lower. Let's see what happens. A little bit concerning that it trades lower first, sweeping out the lows and then back into the range, but let's see if it offers a setup. And there we go, we do get a bearish candle closure right in here. So with that, I can open up my trading panel, look to get short on this area. Now I want to go ahead and enter short on the close, put my stop on this high, and then look for 2R. We'll enter and sell 2 at the market and see how this works out. And there we go, we get stopped out. So what can we learn from this? Our point of interest wasn't really there, it wasn't being respected, and we also took out these short-term lows prior to entry. This expansion candle, or what we are anticipating to expand lower, opened and went lower first, then back into the range. We want to see that move higher first, and then back lower. Let's get into our next example. So here we are with our next example. This is on gold, and we're on the daily chart here. So if you notice, we have price, it was within a range here. Price sweeps out the high in the range, then trades to the low in the range. What do we notice about this trading through the low? We have expansion lower met with expansion higher. So expansion met with expansion is a reversal. So I'm considering this bullish. We have a consolidation. If we are bullish, we have a consolidation. What do you want to see? We want to see lows ran out in the consolidation to trade it higher. So zooming in here, we sweep out the lows. Do we have a bullish candle closure? We do, as this day sweeps out its previous and then closes inside. So with that, now I have a daily bias to trade it higher the following day. So dropping down to the hourly chart here, what does our checklist say after we have a one-sided daily bias? Well, we have to find that low and see if we have a change in the stated delivery. Well, with price sweeping out this low previous, find this series of down close candles, in this case it's 1, and we do have a change in the stated delivery. So with that, I can be looking long in the following candle, but I need a point of interest. So taking a look at this, is there a point of interest in here? Well, price is once again consolidating. So if price is consolidating, I want it to trade higher. What do I want to see? I want to see price take out the lows, have a bullish candle closure, drop to the lower time frame, and then get on side. So let's see what happens. Here we take out the highs, that's okay. And there we take out the lows. So we are now taking out the lows, hitting our point of interest, and we are aligned with our daily bias. So from here, I can drop down to the 5-minute time frame because we have a bullish closure here. Now down here on the 5-minute time frame, do we have a change in the stated delivery? Well, finding the series of candles here, no, we have not yet closed over that. So I have to wait for that to occur before I can take an entry. That's part of my checklist. So letting the candle pass, do we close over it? Here we do. So now with this closure over, I could look to take an entry. I'd put my stop on a protected low, which is this low out of a fair value gap. And then I want to be looking for 2R, or I can look for those standard deviations, right? Which is a -1 standard deviation from this manipulation leg. So let's see how this works out. So as we let this play forward, we get price expanding higher, and there it hits our TP. So just to review, we have our daily bias. So if we go back out to our daily time frame, we have price closing back inside the range, which gives us a bullish bias for this day. We go to our hourly time frame. where we have that confirmation or the change in the state of delivery, and then we have a consolidation. So this is blending it with the phases of price, but we have a sweep in that consolidation or taking out the low or a point of interest, and we have a bullish candle closure. Then we drop down to the 5-minute time frame and we wait for a change in the state of delivery. Once I have a change in the state of delivery, then entries are valid to look long. So I took an entry, put my stop on a protected low, and then looked for the -1 standard deviation, which is from this low to this high here, and flipping it over. Let's get into another example. So here we are in our next example, and if we're taking a look, what do we have? We have that candle closure here. So that is saying we can look long in the next day, and the next day did form a nice trend day up. What do we notice about that? It closes over the previous high. So going back to the PDF, what are we talking about? Closure over the previous day high. I can anticipate a continuation higher. Now we have a one-sided directional bias, and we can drop down to the hourly time frame. So here we are down on the hourly time frame, and I want to look in this reversal candle. Do I have a change in the state of delivery? I do. So that is just what I want to check to make sure that this is a reversal and we can continue higher. So now I want to look, do I have points of interest in this area? Well, I do have a fair value gap here. Let's see if that gets respected as we continue on. No, it doesn't. So what I'm going to use now is those intraday lows, right? So can take a look at these lows here, or when we form new lows. And right there, we go ahead and we sweep out lows. Do we have a bullish candle closure? No, because we have price sweeping out its previous, closing back below, right? Yes, it closed back inside its previous range, but this is a bearish candle. Let's wait and see if we get displacement up or another sweep. And there we get another sweep. So now we have, in a point of interest, an hourly candle closure, and I can drop down to the 5-minute time frame. So here we are down on the 5-minute time frame, and what is next? We need to see if we have that confirmation or the close over the series of down close candles, which we do not yet have. So I need to wait for that closure over. So now this closure over validates this low. Now I look in here. Do I trust any of these lows? No, because none of them reach into a point of interest. We have a fair value gap sitting right here. So I'm either going to have to wait for some more confirmation that these lows are going to hold, or I need to wait for a sweep and then a continuation entry. There we get the sweep. Do we get a continuation entry? I want to see a closure through this down close candle to confirm this low. And there we go. And so with that, I could look to take an entry on the retest, my stop on the low, and then look for 2R. Now with that, I'm going to have to take a limit order right there. And now I'll go ahead and hit buy. So place that limit order. Let's see if we get filled. There we are into the position. Let's see how it works out. And there we go and hit our TP. So once again, just to review this one, because the top-down analysis is important, we have what? We have price reversing on this day here, expansion higher, and then I'd be looking for this next day to continue higher as well. Going down into the hourly time frame, put up our hourly candles, we have a reversal here, a continuation, and I'm just expecting a continuation here as well. Dropping down to the 5-minute time frame, we have the hourly candle closure, which is bullish, and then we look to get on side with a continuation. Now just a little bit of sauce that I will add in. If we're looking at the hourly time frame here, if we're expecting price to continue to this previous day high, that's our target, right? So the best way to get high risk to reward trades is to take a lower time frame entry and just use a higher time frame target. So instead of using my target on the 5-minute time frame, which are these highs over here in 2R, I can go ahead and use the hourly target, which there puts me at 5.63R. And that is the best way to get higher risk to reward trades because you're using logical targets. Let's get into the next example. So here we are in our next example, and a lot of people overthink the daily chart. So I'm going to show you guys, even with just 4 candles, how you can kind of get a sense of what is going on, and then you can use the higher time frame. You can see we sweep out this high here, and we do what? We close back inside. This is our target. We're trading back to this low. We sweep out the low, and this candle engulfs everything. So this is very bullish. So what could I anticipate the following day? For price to continue higher. Where would I want to see that out of? A point of interest. And if you notice here, we already have a low right there, and we have a fair value gap here. So this is where I'd want to see price form a low if we're going to trade it higher. And what do we notice there? We have price reaching into the fair value gap and closing back outside. Now on other exchanges, this was a candle 2 closure. We're closing back above this previous, so we'll drop down to the 5-minute time frame. Now down here on the 5-minute time frame, it is a bit messy, but we have this series of down close candles that form the low. I want to see when price can close over that. And there we go, we get price closing over that, so then I could look to take an entry. Now with that, you can't really see what is going on here, but there is a candle that has a nice wick right in here. And so with that, looking to take a long setup on this close, putting my stop on this low, and then looking for 2R. So we'll go ahead to this order panel, place an order. This will be a market entry. So we'll go ahead and go to market, and then we'll go ahead and buy. So let's see how this works out. We get a retracement, and there we go, and we hit our TP. So here we are in our last example, and what do you notice? We have price sweeping out a previous high, we have failure swings on the lows, and then what else? Do we have that change in the state of delivery on the hourly chart? Well, you can see with this gap, it's a little bit messy, but this would be the series of up close candles that made the high, so we do. Now you notice we trade quite a bit higher into that, but that's why it's important to notice we have this continuation order block following, right? So with this, we are taking out our previous day's lows, which would be that first target. So if we are going to reverse, this is where we would reverse. So I want to see, does price displace back into the range, right? Because if it displaces back up, then it can be a trade higher, but that's not with our bias, so we'd ignore it. Or if it's going to retrace shallowly into a fair value gap and then continue lower, we can look to get on side with that. Now this next candle here, that's not displacement back up, so it's looking more like a consolidation or a retracement. And there we go, we reach into that fair value gap, so I'll go ahead and mark that out. And we have a bearish candle closure. So with everything met, we have a daily closure that gives us a bias. We have that hourly change in the state of delivery from this high. We have a point of interest in a bearish candle closure. I can go down to the 5-minute time frame. Now down here on the 5-minute time frame, I'm just going to repeat that process. I have a bearish candle closure. Do I have a change in the state of delivery? Not yet, so I need to wait for that. Once that occurs, then I can seek entries. So let's let that play ahead. And there we go. That is enough for me. We get the closure through, we come back up, we retest this level, we sweep out previous high, and then we get displacement back lower. So with this, I'd be willing to take a short position here, put my stop on this low, or if I don't trust that, I can give it a little room, right? Because when I think about it, I don't want to see price trade above 50% of these opposing candles. That's why I can trust this high. So for me, maybe I'll just give it a little bit of room to sweep if it wants to. And then in this case, I can either look for 2R, right, which is right there, or I can look to trade towards this previous low. So with this, go ahead and place an order right there. I'll sell at the market, and then let's see what happens here. And we get that continuation lower. Now, what do you notice about this hourly candle here? It closed below the previous, which allows this next candle to expand as well. Now let's go ahead and exit backtesting and take a look at the journal to see how it went. Now after exiting my backtesting session, I can go ahead and click these 3 dots here and go to session results if I want to view the statistics. And you can see we did rather well, 80% win rate and a 2.79 R. Obviously, this is over 5 trades, so with a larger data set, this win rate percentage is likely to be lower, but I'm rather happy with a 2.79 R. For my system, I'm looking for a minimum of 2R because that allows me to understand that with a win rate over 34%, I'm going to be break even or profitable. Now, if you want to review individual trades, you can come down here and click and do so. But the main point of this video was going over the playbook. So if you want to check that out, you can use my link in the description below and code TTrades for 20% off. And if there is enough interest, I can do a video dedicated on backtesting. Just let me know in the comment section below, and I can get started on that. But with that said, I hope you have a great rest of your day, and I'll see you guys in the next one. Have a good one.